Today is it's one of those days, right? It's the first week of June. Trev hasn't published their numbers yet, so we get to kind of discern what they're probably going to be reporting this week, or hopefully this week. If not this week, then early next week. But we'll make some predictions like we do at the beginning of every month, and then we'll kind of dive back into the weekly numbers and then talk about the optics overall as far as the marketplace is concerned. So this is the data points for the last 3 years. Let's start off with listings and number of sales. Look at the number of listings. Like, this is the peak in the last 3 years, literally, in terms of number of listings. We've never seen so many listings in any given month in GTA freehold segment, not including Halton. So we're at a new high as far as we're concerned. And I suspect, again, remember, this is a specific segment and area that we're looking at, GTA freehold, but I suspect the overall market's going to follow the same path, right? So number of listings is probably going to be way up. And we're looking at the last 3 years here, right? We've never seen this many units available. In terms of number of sales, so far, there's still going to be some data being reported. We know that these numbers are always a little bit fluctuating. 32 sales, you compare and contrast that to last May. And last May, we were talking about number of sales down, listings at an all-time high in the last 3 years. I'm going to go back. Let's look at the last 5 years just to kind of see what the numbers look like for the last 5 years. So the last time we saw listing inventory at this level, we're talking 2022 March, okay? So that's pretty interesting information to have. Now, we also know that on the 4th this week, we've got a rate announcement. So one thing that we want to take into consideration is what's happened previously with rate announcements. So I've shown you this chart before. Red circles show the amount of inventory increasing for all of the rate announcement, save and except for the one rate announcement in the holiday season, which is typical. So every time we had a rate announcement, the following week listings went up, right? And they started shooting up pretty considerably. So given that we're already in what we consider an interesting peak environment in the last 5 years, last 3 years for sure, this is the highest number of listings we've seen. Come June 4th, it could go in a totally different direction. Now, the question then becomes, are the rates actually going to be dropped this Wednesday? And most of the things that I've been reading indicate that rates are not going to come down on the 4th. And there's a couple of reasons for that I'm going to share with you here. So I've actually documented this. I took an RBC article and I put this together. I'll share this when I share the market update flyers for you as well. So according to RBC, they're saying that inflation still needs more monitoring, right? So in April, inflation dropped to 1.7%, but that's a 12.7% drop because of the removal of the federal carbon tax. So that's the first thing. Core inflation is still theoretically 2% above target right now, right? So we haven't seen a full stabilization as far as RBC, and I think CIBC and BMO are reporting similar things. Now, the next thing is the labor market. So labor market, unemployment rose to 6.9%. It hasn't spiked dramatically according to RBC, but a slight rise in unemployment isn't enough to justify in itself a rate drop, right? And then you've got geopolitical and trade uncertainty overall. So when you look at geopolitical and trade uncertainty overall, we still have this nonsense with the tariffs. You guys know that it's gone through the courts now, and it's been appealed. And once it gets appealed, in the meanwhile, the courts have waited. So they've basically paused everything, but the tariffs are still in force and effect where they do apply. So based on with housing, labor, and trade data fluctuating, and we know that the energy prices are temporarily distorting right now because of the removal of the federal carbon tax, Bank of Canada is probably going to take a wait and see approach. And once they have the May and June data, then they'll start looking at rate cuts following that. So it makes a lot of sense. I suspect that that's what we're going to see. So you're not going to see the bank drop the rate. And if the bank doesn't drop the rate, then you have to start wondering, well, what happens to the number of listings? So if the Bank of Canada holds their rates and we don't see anything happen materially there, we're already at an all-time high as far as listing inventory is concerned month over month. So maybe we won't see more inventory. And I suspect with all of the last rate announcements where the rate was dropped, that's what pushed people into that mindset of listing because they were waiting to see what was happening with the market and the Bank of Canada's data. So you could see listings start coming down. You could see them remain the same. It's unlikely that they'll go any higher than this, especially once Trev drops their market update. A lot of agents will probably discourage their sellers from going to the market. But you have to keep in mind, and I say this every week, and I'll say it again now, it's very important. You have to look at what's happening in your micro market. You can't look at Ontario generally. You can't even look at Toronto generally. You have to literally go into your neighborhood. So if that's Mimco, you look at Mimco specifically to see what the inventory looks like. Because if there's no inventory, well, then this data is not going to impact you. You start seeing transactions. We're still seeing multiple offers in certain segments, but it depends on where the property is located. So forget what the headlines say from a high-level overview perspective. Really break down and pare down what you're seeing in your micro market, because that will tell you and help you delineate whether you should be listing or waiting, and then the strategies around that. Okay, so that's what we're seeing overall. Now, in terms of other optics, so let's quickly go back and we'll look at the remaining data points. So let me pick this back to 1 year, last year. Okay, so in terms of what I expect TREB to report on, so we've already talked about supply and demand from the TREB perspective. Now let's kind of look at what the TREB numbers are likely going to look like for the other optics, right? So we've got the average sale price, May 1.3, maybe it'll fluctuate slightly. But if you go back to last May, we're looking at an average of 1.4, and you can see it's pretty discernible difference between where we are here. So listings up, likely peaking, sales down year over year, prices down year over year. And what's really important to unpack as well is, well, what were the Bank of Canada rates last May and last June? So you look at the Bank of Canada rates, we saw the first rate drop in June 2024. We nudged down 0.25%. And so money's cheaper. We're sitting at 2.75%. Listings are peaking. Sales aren't carrying pace. And so that tells you we could be teetering into interesting times, even in the GTA freehold, not including Halton. But again, the micro level is very important. Now you look at the average days on market. So looking at this data point, we're at 22 days on average in May right now. Last May, we were sitting at 15 days. And again, this is at a 5% Bank of Canada interest rate. So to unpack that and think about what's going on, I think this whole Trump nonsense is still kind of lingering. And I think with the current rate announcements, if you read RBC's article that I've shared with you guys, RBC's saying that the Bank of Canada rate drops are still working their way through the system right now. So they don't have hard data in terms of what the direct and indirect impacts have been. We've started to see a flavor of what that's meant. Okay. Now, in terms of the other numbers we're looking at, the average SSL ratio, so at May, we're looking at just over the 1 mark. So again, properties continue to sell very close to asking, sometimes over asking, and sometimes just under asking. Last May, we were sitting at a little bit higher. So things are starting to adjust slightly. Does it mean that we're teetering into dangerous times? Probably not. I think, again, we're through the worst of it. The weather's finally cooperating, and things are going to start materializing in a positive way. So that's what TREB is likely to report. Now, anybody that's sharing this information from TREB, don't just send out blanket updates. Help clients unpack and understand what's happening in their micro market. And I'm going to show you 2 things with Habistat and Trendly at the end of this that you guys can use as well, which I think is very valuable. I created a video and I posted it, but I want to make sure everybody on this call is aware. Okay. Now let's go back and let's look at the weekly numbers. So we're now going to go back and correct the numbers from the week before. Let's see here. This is the 31st now of May, 24th. They've actually adjusted, unfortunately. So let's go back and try to unpack the months of inventory. So let's go here to the 31st. I'm going to take all of this out for now. Okay. So as of the 31st, and we know this number is probably going to change, we're looking at, I wish I could tell you how many listings. It's close to, let's call it 2,500, because I can't see. It's just over 25, I'd say 2,600 listings. Okay, and the number of sales, we know this number is going to go up, so 676. Let's go back the week before that. So this is the week of the 24th. So week of the 24th, let's ballpark it at, say, 2,550 in terms of number of listings. Number of sales, let's say 640. Go back the week before. So the week before that takes us to the 17th. As far as the 17th is concerned, we're looking at 2370. We've got the week before that, which is the 10th. So 10th, we're looking at 831. Number of listings, we're looking at 24, and then 831. Okay, and then I'm going to quickly grab this, pull it down here, and then let's go back 1 more week here and look at May 3rd. If we look at May 3rd, number of listings, 2471. I might have screwed that up. I'll go back and fix that. Number of sales that week, 703. Okay, and then we look at the 10th again just to correct this. I think I messed this up. So 10th, we're looking at 24. Number of sales on the 10th were 831. Okay, so based on this, let me just make sure that the calculator is running. Should be the same number. Should be correct. Okay, so based on that, we're sitting at around 3.5 months of inventory for May. Okay, which tells us again that it's not a crazy time per se, but we're starting to teeter into a balanced market. It's not a buyer's market. When you look at the averages and the totals that Trev is reporting, they're talking about overall. They're mixing condos or mixing other data points, which will throw your calculations off. So GTA freehold, not including Halton, you can see the types of properties for sale: freehold, detached, semi-detached, townhouse. In these 4 areas, around 3.5 months of inventory. Okay? And again, when you start breaking it down into micro markets, it's all over the place, literally. I've seen some pockets with 6 months of inventory and some pockets with 2 weeks of inventory. So you have to take a deeper dive in terms of the data points. So that's what's happening on the freehold side. Now let's look at the condo side very quickly. I'm not going to bother with making predictions on that in terms of what Trev is going to say. We'll just wait for them to report those numbers. But let's look at it overall. Okay, so on the condo front, last 12, so you can see number of listings is starting to come down. Sales are still kind of flatlined. Okay, as far as the optics on the condo front are concerned, if we start looking at average sale price and those other metrics that we're looking at, on the condo segment, average asset sell ratio, again, flatline, nothing specific or special rather happening here. In terms of days on market, it's up slightly. This will probably come down a little bit. We're probably fluctuating around this range. And then sale price, again, it's down, but I suspect this to bump up a little bit. We're probably sitting exactly where we are. Now, I can tell you, for those of you that are dealing with rentals on the condo space, if you appropriately price and your photos look good and they're not taken in an iPhone, you'll be okay. And I have proof of that, right? I had a couple of listings at Any Craig, 30 at Any Craig. When I listed those properties, we had over 70 competing listings, and I still ended up leasing those properties over asking. Yes, we had a good view. Yes, we had good things around it, but pricing and the strategy around that campaign was very specific, and the results speak for themselves. There are still units that are in that row that have the same view that are sitting on the market 45 days now. So don't go out with your iPhone and start taking photos. You're doing your clients a disservice. Spend the money. At the very least, even if you don't sell the property, your marketing is your footprint. That's your thumbprint online in the digital space. So when you put something out on the internet that's, got your name on it, people will see that. And they'll see the shitty marketing you're doing, and then they'll hold that against you when it comes time to list their homes. So be careful and tactful with that. Now, in terms of today's, I want to share a couple of quick things with you, and then I'm going to go back into the data points I was gonna show you. So a couple of things here, okay? First and foremost, actually, let me open up my napkin. So these are the visuals that you're going to see in your weekly market update, right? So nice little visual here. 21 days on market on average right now. 2.75% is the Bank of Canada rate. 1.7 is the inflation, right? So this looks kind of nice. It'll be a nice thing for you to share across in your CRMs. Advice for buyers. Again, we know right now they can leverage and negotiate, but they've also got to keep in mind that the bank is probably going to pause. So that's going to fluctuate in terms of decision making and what people are going to do with that knowledge. For sellers, the advice is the exact same right now. Look at your micro market, price competitively, make sure you highlight values and take very good photos. We're predicting that once we start getting into the proper summer market, we're probably going to see more listings. We're probably going to see an uptick, but it just depends on what people do with the numbers that are going to be reported this week or next week. Okay? So keep those things in mind. Now, what I was mentioning earlier, so